Hello, everyone. Good morning, good afternoon, evening, and nights, wherever you are. We are Group 2, Format B, Raiza Carrillo, Adriana Zambrano, Kevin Ontiveros, Manuel Valera, Michelle Chacón, and myself, Mariana Alvarado. I hope you like video.
What is the accounting? Accounting is a discipline that records, measures, and analyzes the finances of companies. Is the entity providing information useful for decision making and complete with tasks or legal obligations. Accounting start employed the relative of finances tank. These include for logs, balance sheet, cash flow, and statement. Starting report a lot is to assess business performance. Is big screen the financial statements the transparent rated and correct. Some accounting principle. The principle of the company in operation. Principle of across. Principle of uniformity. Principle of prudence. Principle of compassion. Principle of correspondence. The principle of material. A principle of market unit. A principle of reality.
In the fundamental of accounting, the business entity principle establishes that a company is a unit independent of its owner, partner, or manager. This means that the company finances must be kept separate from the personal finances of the owner or other companies. Importance of the business entity principle. Financial clarity allows you to quality identify the company income, expenses, assets, and liabilities. Legal and fiscal responsibility facilitates compliance with fiscal and fiscal obligation. Decision making provides reliable information to manager investor. Application of accounting standards. It is a basic principle within the financial reporting standard IFRS and the generally accepted accounting regulation. It is essential in accounting because it guarantees the prudence and reliability of financial information. Its importance lies in the following aspects. 1. Reduction of financial risks. By anticipating possible loss and recording only safe income, you help prevent negative aspects and maintaining a realistic view of the company financial stability. 2. Transparency and trust. It provides greater credibility to the financial statements, ensuring that they reflect a true and conservative image of the company's economic situation. 3. Regulatory compliance. It is principal aspects in the NIF and the generality aspects accounting principle GAAP, which facilitates audit and compliance with tax and accounting regulation. 4. Facilitates decision making. Manager and investor can make decisions based on safer and less speculative financial information.
This principle requires that accounting information be based only on verifiable facts free for personal opinion or basis, and ensures the accuracy and reliability of financial records. Key characteristics include fact-based record supported by invoices, contracts, and other documents. Impartiality, meaning financial information should remain neutral and unaffected by personal preference. Reliability, ensuring financial statements reflect a company's true economic condition. Next, we have relevance, which means that financial information must be useful for decision making, ensure help managers assess performance and plan effectivity, and main characteristics are decision making support, providing a valuable insight for business strategy, timeliness, Ensure information is available when needed. Materiality, meaning only significant data that impact decision should be included. Finally, full disclosure ensures transparency and financial reporting be included are relevant information. This principle is characteristic by complete transparency, allowing stakeholders to fully understand a company financial health, not hide information, meaning all significant facts must be disclosed. Regulatory complaints ensure finance statements follow accounting standards and legal requirements. Finally, full disclosure ensures transparency and financial reporting be included are relevant.
Hello, my name is Manuel Varela and I am going to talk to you about international accounting. International companies can show how they present financial information to outside parties. The rules and regulations between countries vary significantly. Accounts worldwide are familiar with the words generally accepted accounting principles (GAAP). Some of the basic principles are: 1. The going concern principle. 2. The prudence principle. 3. The matching principle. 4. The consistent principle. Thanks.
The development of accounting principles varies considerably depending on the place in the world we are in. For example, in most English-speaking countries, it is in accepted practice to offset unrealized gains with unrealized losses or to reveal latent assets award, provided some fit proof of current values can be shown. Australia, on the other hand, as its own view of regulation, the contents as legally adopted I fear it is, but also maintain some local started Australian accounting standards bars.
Of this principle between countries. First, let's have basic definition of this. They are a set of the rules and the standards that guide a country practice, produce equitable and understood results, and establish how financial transactions and events shall be recorded, measured, present, and interpreted. Depending on whether the company chooses to follow local accounting standards, the International Financial Reporting Standards, or USA GAAP. Whether the company can choose its regulator be the laws of the country where it registered, for example, the USA and the Japan, and create a role company to prepare their financial standards using two standards or international accounting standards coming, but they must also include a reconciliation with the national GAAP. In the USA, your accounts use follow generally accepted accounting principles, and Europe, in many European countries, international financial reporting standards or NIF, which are from principle based comparing to GAAP, allow with professional judgment. And Japan GAAP. Japan is our GAAP, which has similarities with the USA. Latin America. In many Latin America, every years are debt or las NIF, but they may be local, the linked with national regulators. Show a business account know about the principles in the third country. Knowledge of local regulators, language, culture, business practice, continuing education, so important. Keeping update with change accounting standards and participating in accounting education is crucial and to ensure knowledge to skills are up to date. Thanks.